Nassim Taleb says Bitcoin is worthless. Why? And we're going to read my man Michael Edison here to see what Nassim says about Bitcoin being worthless. And we'll go over to his objections, as Michael explains here, and we'll explain them one by one. I'm a huge fan of Michael, big guy, good guy, mathematician extraordinaire. He knows more about mathematics in his pinky than you and I know in our whole lived experience, if that makes sense. All right. So Nassim Nicholas Taleb doesn't mince words. When he thinks that something is worthless, he'll say so. In a recent paper, he says in no uncertain words that Bitcoin is worthless. However, those uncertain terms are not only in mathematical language, but also in Nassim Taleb speak, and they need some explanation, which I'll explain here. His paper, Nassim's, is Bitcoin Currencies and Fragility. All right. This is Michael. I'll list Nassim's objections and explain them one by one, and they are in the order which Nassim presents them. All right, objection number one. Blockcoin technology is similar to von Neumann's pseudo-random number generator. This is not a serious objection to blockcoin technology, except to say that something with a faint resemblance to it was invented and used before and is still widely available today. Taleb's purpose, it would seem, is to minimize the overblown hype surrounding blockchain. Anyone who's programmed Monte Carlo simulation or knows how it is done is familiar with random number generators. Given an arbitrary seed number, a random number generator creates a sequence of numbers that appear to be random, but given that same seed number, it always generates the same sequence. Since these numbers are not mathematically random, they are called pseudo-random. And I completely agree with this. And this is my thing with the Monte Carlos. If we have a quote random sequence of returns and we use a 5 as our average annual return and a 15 as our standard deviation, it never changes, man. It gives you, any 10,000 scenarios is always going to come the same thing. It's completely not random. You should always, I don't know, I've always wondered that myself. I said, anytime you enter on a random sequence of events on a Monte Carlo, it always comes up the same thing. It's weird, man. So I don't know if you can say it's random, but that's the best we got. The faint resemblance to blockchain lies in the fact that the sequence in the chain is immutable and reverse engineering is virtually impossible. Given a pseudo-random number sequence, unless one knows the generating formulas, it is virtually impossible to determine the previous number in the sequence. Similarly, in a blockchain, given only a coded transaction, it is virtually impossible to determine the transaction's identities. All right. So basically, just because there's some faint resemblance, you can't, in a blockchain, given only a coded transaction, it's impossible to determine the transaction identity. So that's not a hit on blockchain and certainly not Bitcoin. I don't like this one either. If Bitcoin's price could drop to zero at some point in the future, it would be zero now, or should be, I should say. Yeah, I don't like that at all. Gold and silver, Taleb points out, will maintain their physical presence for the foreseeable future, while Bitcoin's physical presence depends on miners and on the network, the internet. Bitcoin's physical presence lies in the electrons arranged in a certain way rather than the durable material that can be held in your hand like gold and silver. If Bitcoin's price goes to zero at some point in the future, it is likely to stay there, to hit its absorbing barrier, as Taleb states it. Therefore, he says, by rational expectation, since it generates no revenues or dividends and you can't hold it, a physical presence, the value should be zero now. And this is, Michael, this is correct by rational expectations theory, but of course, a large part of the reason for Bitcoin's valuation is not rationality. It's a greater full rational. If someone will buy it from you today at a higher price, its price is worth that today. I completely agree. The price is always what someone will pay for it, regardless of the rationality expectations, regardless of what you think. If this pen, you'll pay $10,000 for this pen is worth $10,000. Why would you do that? I don't know. But you know why the value is there. And this just goes back to Karl Menger's Principles of Economics, Ludwig von Mises, and all the Austrians about determining value. Value is in the eyes of the beholder. So just because this has no rational value for a Taleb, because you can't hold it, doesn't mean there's no value. Of course there is. The rational expectations line of reasoning, while it might have appealed to a blinkered economist of the type that Taleb regularly decries, is not persuasive. Michael says not fully persuasive. I say not at all persuasive. Bitcoin fails as a currency because transactions are too expensive and slow. Now, this is interesting. I did not know this, and I was reading up on some of the comments and other things that seem to dispute this to some regard. So it's interesting nonetheless. But this right here is a good thing on it if it maintains itself. This objection bites and is decisive. Bitcoin has not been able to free itself of the blockchain's constraint that makes transactions slow and expensive. When I first became, this is Michael now, when I first became intimately, let me hold a second. Michael says, when I first became intimately familiar with Bitcoin and blockchain in 2017, I did it by teaching a cryptocurrency course in the MBA program at the Business School of the Hong Kong University of Science and Technology. Before I taught that course, I knew nothing about it. But a friend who had become an enthusiast impelled me to learn. The best way to learn is to teach, right? During that heady period, the market value of Bitcoin is rising rapidly. More and more vendors were accepting it in payment. I thought if Amazon decided to accept it, the game would be over. It would become the world's most widely accepted currency, all based on Amazon. Such truth, man. But I learned more about it. I discovered that it was not possible because Bitcoin's blockchain was severely limited. Because Bitcoin's blockchain was severely limited in the number of transactions it could process per second, and the waiting period for the nodes of the network to collectively confirm that the transaction was valid. As Taleb says, while you can instantly buy a cup of coffee with your cell phone, you would need to wait 10 minutes if you use Bitcoin. Some Bitcoin enthusiasts claim that this limitation might be mitigated, especially by using something called the Lightning Network, which enables trades off blockchain with one's frequent trading partners, such as one's most frequent coffee shop, later to be aggregated and returned to the blockchain periodically. But my impression that this has not remedied the problem and perhaps never will. Nevertheless, some other cryptocurrencies do not have the same constraint as Bitcoin. But Taleb notes in his introduction that there are about 10,000 cryptocurrencies, and Bitcoin has by far the largest market cap. So he confines himself to Bitcoin. I've not followed the technology enough since teaching it 4 years ago to know how to evaluate the arguments that this constraint is not fatal, but I find it the spear to the heart of Bitcoin's ultimate success. I did not know that. We do have some people who argue against that it is the Lightning Network, where they say the Lightning Network thing does, Lightning has absolved Bitcoin of the slowness of the process. Bitcoin is too volatile. Bitcoin's price is too volatile for it to be used as a currency. This is just inherently obvious to me. I mean, now the issue, of course, is once it stabilizes. So let's see what I think. Last time I checked, Bitcoin was trading at 42,000, up from 28 just a couple days, like 2 weeks ago. 39,000. See, it can't. I mean, look at this. You can't have a currency that goes like that. It just is not. I mean, people gripe about inflation, but the price of dollars only declined about 2 to 3% a year. Bitcoin's just all over the place, and this is right here is a big one until it stabilizes. All right. Let's see. The seller of an item priced in Bitcoin, says Taleb, priced in Bitcoin yet available anywhere else in the fiat currency would be a short currency option stuck at the initial exchange rate. That is, if you sell an item for Bitcoin and its price continues to be highly volatile relative to the goods and services you'll want to buy with it later, then when the time comes a little bit later for you to buy something you want, it can't be sure how much you'll be able to buy. I completely 100% agree. Once again, this is a problem given how volatile Bitcoin is, but it's a problem that could conceivably go away if Bitcoin's price somehow stabilizes. I completely agree with that. 100%. If Bitcoin somehow stabilizes, and the question is when, it's going to be perpetual for stable. It can't just be a couple of days, a couple of months. It's got to be a couple of years, I would think. And then Amazon takes it. The game's over for Bitcoin. I mean, that's it. Once Amazon accepts it, Bitcoin will be used heavily. But until then, and it won't be until the price stabilizes. I mean, think about it, man. You know, just this bottle I got from Kirkland, this tropical mango vitamin zero, say it costs 50 cents. I mean, let's just say it's one Bitcoin, right? And then next thing you know, one Bitcoin buys 10 of these. Why? I'm not gonna relinquish my Bitcoin if in the future it could buy 10 of these for that same Bitcoin. I'm just not gonna. That's like deflation, essentially. The deflation, the value of the price of this is going down relative to the currency. No one's gonna part with the currency. So until it gets stable, you're not gonna see this. So when is it gonna get stable? Either at a 50,000, 20,000, no one knows. It's just not going to replace currency because of lack of stability at any time soon. And then finally, if you don't have lightning quick technology to get it to transact, it's just not going to either. So anyway, interesting. To be an inflation hedge, Bitcoin must closely track the value of a basket of goods and services. But of course, Bitcoin doesn't because there's volatility. Its possible values and inflation head is completely speculative and unpredictable, 100%. So what Mike was saying in Nassim is that, it's a hedge against inflation. We don't know that. I mean, just because it's done incredibly well the last 10 years doesn't mean it's a hedge against inflation. I hate that argument, man. It's a hedge against inflation. I only have 15 years experience. Everything's been a hedge against inflation against the last 15 years, but you can't say it's an inherent hedge against inflation, especially when the volatility is off the charts. Is it a hedge against inflation? I mean, when the market's going up and going down? I mean, has it been a hedge against inflation this year? It's actually gone down in value where inflation has gone high. So, all right. Bitcoin is not a libertarian's dream. All right, some of the early enthusiasts for Bitcoin are libertarians who have a preference for less government, but Taleb argues that Bitcoin is not an offshoot to libertarianism. His argument for this is a little bit obscure, in a sense legalistic. He claims libertarianism is fundamentally about the rule of law in the place of regulation. It's not about the rule of rules, but mechanistic, automated rules with irreversible outcomes. I would like to see him debate this one with a true libertarian who's enthusiastic about Bitcoin and is enthusiastic because he is a libertarian. There are such people who could make for an interesting debate. That's an odd thing to me. I don't know why that's a hit on Bitcoin. Bitcoin is not a safe haven because it cannot be used as a tail hedge against systemic risk. He points out that in March 2020, when the stock market plunged and then recovered strongly, Bitcoin plunged even more and then recovered with the market due to massive injection of liquidity. Thus, Bitcoin did not hedge against the stock's market drops and did not prove itself independent of the market. All right. I agree with that. I don't know why anyone would say it's a safe haven against systemic risk. Would you say that about Bitcoin? Does anyone? I don't know. Bitcoin is not protection against tyrannical regimes as transactions are open for all to see. Yep. All Bitcoin transactions can be viewed by anyone on the blockchain.com. What is blockchain? I've never been. Blockchain.com, the world's most popular way to buy, sell, and trade crypto. And there's Bitcoin, Ethereum. Is Dogecoin still not, is it out there still? I have no idea. Lightning fast crypto trading 4 fiat currencies. All right. Bespoke crypto lending. All right, let's see what, so all Bitcoin transactions can be viewed by anyone at blockchain.com. The transactions are encrypted, but it's possible to trace a complete chain of transactions at that site from the very first entry of Bitcoin. When someone traded fiat for Bitcoin, this is so, I don't know why people don't get this. When someone traded fiat for Bitcoin to the last exit, when someone traded Bitcoin for fiat. And I talked to some U.S. Marshals who go after Bitcoin as part of the drug wars and all that stuff. And like, as much as I hate the war on drugs, it's what they do. So, I mean, it's happening. The idea that your Bitcoin transaction escape the Fed's observations. I mean, just some Joe sitting in his garage freaking trading Bitcoin thinking he's free from government regulation. How did you buy the Bitcoin to begin with? Did you link it up to your checking account? Do you think they can't trace that back? Now, if you're able to launder and all that, well, then essentially you're a criminal, and you don't want to have to do that. So at the end of the day, it starts in your DDA demand deposit account, checking account, ends in your DDA demand deposit account. You think the feds can't follow that? Come on, man. Anyway, it's nuts. Since anti-laundering and know your customer rules require that the party or parties involved in exchanges of fiat money for Bitcoin or Bitcoin for fiat be known to the exchanges for which they transact, it is possible for government, having demanded the information from the exchanges, to trace all transactions and trace them back to the transactors. Exactly. They can say, look, blockchain.com, who was the person who set the account up and what was their account number for which they did? Bitcoin does not solve the agency problem of reliance on intermediaries. All right. Suppose that Bitcoin somehow did become widely or even universally used for transactions, so they could simply hold and trade Bitcoin would have no need of trading a fiat for Bitcoin. Therefore, there'd be no need for exchanges. Disintermediation would be complete. No, it wouldn't, because Bitcoin would still be intermediated by the miners. When the last Bitcoin has been mined, and the last will be mined in the year 2140, the miners will become only compilers of blocks of transactions to be added to the blockchain, compensated by voluntary transaction fees paid for by transactions who wish to have their transaction expedited. Whew. All right. But there's already a threatening oligopoly of small number of miners. If they account in aggregate for the vast majority of transaction block formation, they could be at least as costly as intermediaries such as banks are now. Intermediaries will always find a way. Yesterday's disintermediator will become tomorrow's new intermediary. Interestingly, Taleb's position now is a complete turnaround from what he thought 4 years ago. At that time, he wrote that Bitcoin is an excellent idea. It fulfills the needs of a complex system because it has no owner, no authority, and can decide its fate, is owned by the crowd as users. A turnaround this may be a canary in the cage that signals the collapse of Bitcoin that many have been long predicting. At some point, fools stop believing that there are any greater fools left. Just such a good article from Michael. Let's see. I think I put a comment on here, but let's see. Due to the increasing complexity and cost of the transaction, the capacity of process of Bitcoin has gone from 7 seconds less than a year ago to 4. I don't know what that means. In essence, each transaction rents the entire mining network for a fraction of a second. Transitioning from proof of work to proof of stake will accelerate this, but introduces other complications. Second and third gen cryptos mitigate this problem to some degree. Ethereum can probably process 1,000 transactions a second. As to other cryptos, I think the greater point is that the alleged anonymity of these transactions isn't real. As the U.S. government demonstrated in the aftermath of the Colonial Pipeline ransomware attack. Even if Bitcoin being expected to be worth zero in the long run, numerous market frictions, the present uncertainty would lead to just as Bitcoin be expected to be worth zero in the very long run, so too could numerous other assets such as gold. Yeah, I agree with that. I don't like this. That it should be worth zero because there's no physical presence. Value is what the person's willing to pay, as we talk about. Let's see. And some guy just posted an article. What are you going to believe, Taleb or Rick Edelman? So I'm not sure what's Rick Edelman saying here. All right, so Rick can't explain Bitcoin. Your clients will find an advisor who can. Okay, that bores me. I'll believe Taleb over Rick Edelman. Anyway, so I think some guy had posted, I'm not going to go through it, but some guy had posted about the Bitcoin transactions, the Lightning Network, haven't been resolved. I don't know that to be true. If any of you all know, I'd like to hear it. So anyway, let's see. I think I did post something here. Anyway, love to hear your thoughts. Again, not an expert on Bitcoin. I'm not buying it. I'm just telling you right now. I'm not buying any crypto, but I find it interesting to follow. And to be honest, I kind of root for his demise, not going to lie to you. Just when I say root for his demise, I don't want people going bankrupt on that. But I find it, I don't want to say I root for his demise. I find it interesting that so many people are throwing caution to the wind on Bitcoin because of this false impression that fiat currency is doomed. And as if Bitcoin's the salvation. I don't buy that at all. And I think it's putting it's too simplistic of an explanation of inflation. The government, and this is where I think the problem is, that government printing press is what causes inflation. Thus, inflation will be here because the government printing press is running 24/7, and the solution to that is Bitcoin. I don't agree with that at all, and I find that to be such a simplistic view of the world that that is actually I think is bad. I think it's bad for thinking people to fall for that. Because it's even more it's worse than that, man. There's no other way around that. It's not just a government printing press. It is a cabal of people who run the freaking show, man. And who are these people? I don't know. I'm not even. At the end of the day, it's a globalist. It's a World Economic Forum and the globalist crowd, the politicians, and the red and the right, the red and the blue. I mean, all these people do. The EU. And the idea that Bitcoin is going to be the salvation, it boggles my mind. And I think people are throwing caution in the wind by investing in this thing, thinking that that's a true way to solve this. Well, it's just not. The way to solve all this is to solve it internally. There's no other way. Solve it internally and escape Babylon. And Bitcoin is part of Babylon. That's all there's to it. All right, love your thoughts. We'll see you.